Okay. I believe we are going live, ladies. Good morning, and happy Monday.
Good
Thank you
morning.
so much for joining
Good
us
morning.
today. All right, I'm going to make sure I'm out of there. Okay, make sure this is on mute. I hope everyone's doing fantastic today. Today, we're going to be talking about down payment assistance, one of my favorite topics. And the reason I love this topic is that it allows people to get into homes who might otherwise not be able to. And I love that. I love that we're able to help create sustainable homeownership, by either helping someone with the down payment or allowing them to keep money they saved for reserves and things that may come up in the future. So this is a really hot topic for me. It's something that helped grow my business. It's something that my clients have utilized so much over the years, and we can't wait to share more information with you guys. Let's do this.
All right. Let's see. Katie, you want to start or do you want me to?
You can start.
Okay, cool. All right. So this slide is just a kind of brief overview of, the different types of down payment assistance, at least that we offer. A down payment assistance program is essentially, depending on the program, either a grant or a loan. Typically these programs do have lower interest rates. Also, a lot of them have reduced mortgage insurance. We're going to get more into that. And then some of them have the tax incentives as well. So that's a little bit of kind of what the down payment assistance is. And then these are kind of how they're offered through state agency programs such as Mass Housing, New Hampshire Housing, government-backed programs, and then lender-offered programs. So we're going to go through all the different types of the programs that we offer for down payment assistance. And Katie, I think you had brought in this great
Yeah, so this
item. So
is
you
something
go
that
ahead.
just got showed to me. I don't even know if Kelly or Brianna or Alicia have seen this before, but I saw this. I was at a continuing education event and they shared this link, and this is so cool. So anyone who is a partner to people who are in the real estate industry can sign up for this. So insurance agents, realtors, loan officers, and it's dpa1.freddiemac.com. And what it does is it shows you all of the down payments available, all the down payment assistance available in a state. So, for example, I think we have an example on the next page. We chose Connecticut just to kind of show. Actually, this might have just shown all of them. I don't think we selected any
Yeah,
specific.
this is like their homepage. This is what their
Yeah.
homepage looks like. Yep.
And so you can actually type in your location. I'll pull some stuff up. What this does not include is local grants with the cities or towns. And I always tell clients that if you're interested in getting a grant, call the cities you're interested in purchasing in, because some of those grants, they come and go so quickly that it's hard for us to keep up. But if you call the local towns, they will tell you what's available in that area. Also, I can give them a list of HUD recommended associations or groups that will help guide them in the right direction as well. So this will show you the general programs. So state bond programs are most common here, but it also shows you some community grants that are registered. So for example, in Florida, there's a $75,000 grant in areas right outside of Clearwater. And so this actually showed it on the list when we searched it. So we wanted to share this tool as a resource for you guys because we were blown away by it. And make sure you check with your lender to make sure that they're available to do these grants. And if they're not, we can maybe help you or set you up with someone who could. We have connections all over the country. So we're going to specifically focus on New England today. And hopefully that gives you a little bit more guidance as to what these programs offer.
Perfect. All right, Katie, this is you again.
All right, this is me, my favorite. It's the Katie Show. I'm just teasing. So Mass Housing is one of my favorite loan options for clients. I personally am number 4 in the state for origination of Mass Housing loans, and I'm super proud of that designation. So the first program I want to quickly talk about is called Workforce Advantage with Mass Housing. It is a first-time buyer program, and the income limits are based on household size and all members of the household's income. So some of these programs have 2 different kind of income requirements. One is compliance income to make sure that you meet the needs of this program. And the other is actually qualifying. So that means what does us as a lender use to qualify you for? And the reason these are different is because sometimes you might have gotten a $25,000 bonus this year, but you have no history of getting it. So we can't use that to qualify you. However, it could put you out of qualifying for a lower income program. So you just want to make sure you're working with a lender that understands the nuances to these programs. They are very very particular about weird things. And I won't go into all the weird things. I just wanted to talk to you in general about some specific ones. The thing I love about the Workforce Advantage program is even though the income limits are much lower when there's a smaller household, if you have a family of 5, 6, 7, the income limits are much higher, and people don't realize they even qualify. It's like, oh, I make, 110,000 a year. I don't qualify for any of this. It's like, yes, you actually may. And some of their programs, when you're in Boston, they go up to like 190,000. It's crazy. So this specific program is, you get 2 loans. And you know what? I have a typo on here. It should actually be $30,000 towards the down payment. So my apologies. It's 30,000 towards the down payment, and it's a 0% interest loan with a $0 payment. There is no mortgage insurance. It's actually something called lender paid mortgage insurance. So that means that you also get Mass Housing's MI Plus program, which helps in the event that you're laid off. And you can use that $30,000 towards down payment, closing costs, points, prepaid items. So a lot of times we're separating part of this for the down payment and then the rest to be used to get their interest rate down, get it in a much more affordable place for the clients. And sometimes they're not bringing a single dollar to closing. So I say that with caution because they're going to need to do a home inspection potentially. They're going to need to put deposits on the home. But if I can get, some money back towards those things, I'm going to do whatever I can to include that. So my goal is to keep as much money in the client's pocket as possible and provide them with the reserves and the means to do something in the future if they want to. This program with us is an in-house program, no additional approval from an outside source. And what we mean by that is in order to be a designated or delegated approval for Mass Housing, you have to do so many of their loans per year. And you have to do so many to get started too. So some lenders are approved with Mass Housing, but they have to have them approve the actual loan once everything's put together, which just adds another layer. It's not a big deal. We prefer to maintain as much autonomy as we can. So this means that on our end, there's no difference from the approval process from a conventional loan to Mass Housing to FHA. We do them all in-house. Will you go to the next slide, Sam?
Absolutely. There you go.
Perfect. So this next program it's a first-time home buyers are over 80% median income, and they're based just on the borrowers of the loan. So if you have a husband and wife on a loan together and they both make decent income, but one of them qualifies on their own and qualifies for Mass Housing, they can potentially do the loan on their own. There is a caveat to that. Mass Housing only allows whoever's on the loan to be on the deed, and that can never change. So you can't add someone later. And I know that's a little nuanced, but I wanted to share because it is the most commonly asked question. And they give you 25,000 towards the down payment, unlike the other one, which was 30. And that can also be used towards closing costs, points, prepaid items. This one's a little different. It's at a 2% interest rate for 15 years. So there is a payment associated that you have to qualify for. So that payment's going to be $160 a month. And this has a reduced mortgage insurance. So it does have a mortgage insurance component, but it's less than if someone were just using a non-income based program and just buying a house off the street. So they do little things to help the affordability of the home for the borrower. And once again, same thing on the other program. This is an in-house program. There are no additional approvals from an outside source. We are autonomous and can get you over the finish line without having to wait for someone else's team to say, okay, this is good. I know we're going fast. I want to make sure that we get through all the programs because there are a fair amount. And really all you need to know as an agent, as someone guiding your client, is that they should utilize a lender who has a multitude of programs, because in my opinion, this is one of the best programs in Massachusetts. I do Florida housing as well. It is not nearly as competitive. I think this is one of the best programs in the country. I'm partial to that, like I said. And we offer Connecticut housing, New Hampshire housing, also great programs that Kelly and Sam will talk about as well. And they do come with a little bit of quirks that you want to be ahead of. And so using a lender who offers all these different programs allows your client to get into a home, at the best costs with the least amount out of pocket if possible. And that's a good thing for everyone involved. It might also help them qualify for more, because I can't tell you how many clients I get. Let's say they're in the $300,000 purchase price range. like that's a great way to think, oh, they might be eligible for this lower income program. When you take away mortgage insurance and then you give them a second loan with no interest, it brings up their qualifying quite a bit. And so this is a great way to resurrect clients who have maybe fallen off because they felt like they were priced out of the market. When you add this program in, it can make it much more attractive for them and for you as a realtor.
Also too, like at least for Katie and I, like Mass and New Hampshire are very close. So we're gonna go over the differences in the programs. But if you have a client that's looking in both, that's totally fine. Just make us aware, and that way we can kind of qualify them because they are very different products.
Yes,
That's
definitely.
you'll
They have
see
different
that. But I have a lot of
requirements.
clients that are kind of on the
Yep.
border, so they look in both. So just give us the heads up, and we'll definitely, give them both options. All right, Kelly, this is your turn.
Or they could have the third option of the CHFA, Connecticut Housing and Finance Authority loan, which is structured very different than the Mass and New Hampshire products.
Yeah.
So a couple things to know. So CHFA, historically, you can just get a CHFA loan with no down payment assistance. Most people, when they're utilizing it to get the down payment assistance. And the historic program was called the DPA program. That can be both an FHA loan and a conventional loan. And it has changed a lot over the last year. And that's actually been tricky for a lot of consumers because what the DPA program looked like a year ago and what it looks like today are very different. And there are a lot of lenders who are not necessarily keeping up with the program. And so I actually had an approval a few weeks ago. That was a client that had been approved with DPA, the CHFA DPA, with a different lender. The lender did not realize that the loan product had changed, gave them a pre-approval for what was essentially the rules of the old product, and then they no longer qualified under the current rule. So what is there to know about the DPA? So it is up to $15,000, but it's a max of 4% of your sale price. That is the big difference. So you don't just get $15,000 in the old program. You just kind of got the money and you could use it for whatever you wanted. Here, it's 4% of the sale price. And you give 3.5% for FHA or 3% for conventional, and then the remainder, so 1 to 1.5% goes for closing costs. Therefore, for most clients using this DPA program, they usually either have to have a seller concession or some money out of pocket. There is a interest rate. It is either the first mortgage interest rate or 5%, whichever is less. So currently for everybody, it's 5%, but it just depends. They do have reduced mortgage insurance, and they do have to attend a homebuyer education. The other piece that has really changed over the last year for this is the next slide. We're going to talk about something called Time to Own, which is a Connecticut specific program. And you could actually combine these two programs for quite some time, where you could get both the Time to Own and the DPA. You can no longer do that. It's one or the other. What do I love about DPA? You do not have to be from Connecticut to get it. So if you are moving to Connecticut from out of state, you can get this. And so that can give some flexibility. I've had some clients moving here from New York or Massachusetts, and they're able to utilize this loan. Sam, could you go to the next slide?
Yep, hold on one second. Oh, there we go. Sorry about that.
Okay, so Time to Own is the one that everybody wants to know about in Connecticut. So Time to Own is our forgivable grant program. And actually, I decided to check the website out today. So the trick with this program is there is a set amount of money with the state of Connecticut that is utilized for this program. And the money depletes. Okay, and we can watch it in real time on a website. So on Friday, there was 3 million left in the fund, but it was actually renewed on Friday, and we're up to 15 million, almost 16 million again. Why is that important to know as a consumer is we have had time periods over the last 2 years where the fund has depleted completely, and there has been a lag from when it depletes and when it gets funded again. So we've actually had some clients that we really have to watch as it starts to deplete to warn them that, hey, we could end up with a lag between the money. And there is technically no guarantee that the program will be refunded each time. Now, the state of Connecticut has really said that they plan on supporting this for quite some time. So we feel like it'll keep getting funded, but it is not guaranteed. Now, what is amazing about this program? So it has a 0% interest rate and no monthly payment on the down payment assistance loan. So if you are, say, borrowing the $50,000, we'll talk about who gets 50,000. If you're borrowing the $50,000, that is at no payment with a 0% interest rate. It is forgiven in 10% increments of the principal balance annually. on the anniversary of the loan closing until the loan is fully forgiven on the 10-year anniversary. So for clients who are thinking that they're going to live in a property for a long period of time, that can be a huge boon, right? You're going to get $50,000 and it's going to get forgiven, or $25,000. Financing for this covers up to 20% of the down payment and up to 5% of closing costs. So that's something that we have had some clients that, you know, when we do the calculations, maybe they're only going to get a portion of it. And they're like, what do you mean? Why don't I get the whole thing? Because if it's more than 20% down and 5% of your closing costs, you don't get to kind of like keep getting more. Loan amounts are up to $50,000 for homes located in a high or very high opportunity area, and loan amounts up to $25,000 for homes located in areas other than high or very high opportunities. Now, how do you know this? If you just Google Chaffa opportunity map, you're going to get a heat map with a color coded top bar. You just put the address of the house in, and then it will tell you if you're in a high or very high opportunity area. This can be confusing for consumers though. So if you have questions, your lender is the right place to go. We will happily calculate it out for you. But I have clients that are looking in multiple areas, and one house is 25, one house is 50, the next house is 25, the next house is 50. So we do just kind of have to keep on top of it. The other thing that people are often looking for is like, can you just send me a map of towns? I would like to know the towns that are 25 and 50. So when we're talking about these high or very high opportunity areas, it is not a town. It's actually a census tract, and most people do not know their census tract. But there are many towns where there are multiple zones within the same town. So one area of town might get 25 and one area of town might get 50. So it can be a little confusing. Again, partnering with a lender who does a lot of these loans is very important. Total Mortgage is the #2 Chaffa lender in the state of Connecticut. So we do lots and lots of them, and we're very familiar. Other important things to know about this program: you have to have lived in Connecticut for the last 3 years. So this one is for Connecticut residents. How do they check? That's the question I get a lot. We are going to ask for 3 years of tax returns, right? We want to see that you've lived in Connecticut on your tax return for 3 years. We're also looking at things like credit reports. And Chaffa really does their due diligence on this piece. We have had clients that have taken a respite. They've maybe gone to another state for 6 months for whatever reason. That may disqualify you for this program. I had a client that took a short-term work assignment in Texas for 3 years. He is not able to utilize this program. Chaffa really, really digs in on that 3-year residency. So make sure that you know that, and it's 3 years to the date. So it's not, 2 years and 9 months. It's a full 3 years. Now, people a lot of times ask, like, well, what if I'm not a first-time home buyer? So applicants who are not first-time home buyers may apply if they plan to purchase in a targeted area of the state. So there are areas in the state of Connecticut that are targeted areas. Same thing. If you Google Chaffa targeted area map, you'll get a map that will tell you what they are. That is something that you can use. But borrowers may not own any other property at the time of the Chaffa mortgage closing. Okay, so they cannot own another property. Now, a couple other just quick notes before we move on about this program. This program is only underwritten by Chaffa. So unlike Katie's program where you can be delegated, you cannot be delegated for time to own. So we do our initial underwrite first here at Total Mortgage, and then the loan package is sent over to Chaffa, and Chaffa does a final underwrite of the program. Again, Total Mortgage is doing a lot of these. So we are very familiar with what Chaffa is looking for, but very similar to Mass Housing. They can occasionally get picky about things that we don't always know, but for the most part, we're very on top of it. The other thing to know that is a little bit tricky, and I don't know if Mass and New Hampshire work this way, is one of the things that's different about time to own than our regular DPA program is your front end housing ratio has to be more than 30% of your income. And this is very perplexing to people. It's very hard for us to sometimes tell clients that, hey, the mortgage payment on this property is too low, and therefore you cannot get the product, because it really is meant to help people who could not afford the mortgage payment otherwise. It's there to lower their payment. So if you hear from a loan officer as a realtor, hey, the mortgage payment isn't enough on this one, that might be why. The other kind of cool thing though is we can lower the down payment amount to kind of hit those ratios. So say you're purchasing in a town where you could get 50,000 and you can utilize it, right? That's not more than 20% and it covers your closing costs, but your front end ratio drops under the 30. We could potentially still use the product, but maybe drop what you're getting to 30,000. or 20,000 to make it so it fits in qualifying. The other thing that is nice about this product is you can also use your own funds. So if you have your own $10,000 to put in, or your own, maybe you're going to get a gift from somebody for 20,000 and you want to add to your down payment, you can always add additional funds into this program as well to make it even more affordable. So this is really a spectacular program. We have seen it kind of just like Katie said about mass housing, really make homeownership affordable for our clients. The biggest trick with it though is it's got some quirks. And you do not want to work with a lender who does not know what they're doing. We have, I know Kim Sear is up there in the galley. She's rescued quite a few of these from lenders that just don't know what they're doing. It is open to all lenders in the state of Connecticut. So it's not, some state housing programs have like a special list where you have to be on the list to use the product. Everyone in Connecticut can do this, but not everyone should be doing this. So we have had some interesting ones that have come across that they've used the wrong qualifying income. There's been some stuff that we're like, oh my gosh, somebody doesn't know what they're doing here. So make sure that the loan officer and the lender that you're using has a lot of experience. You should ask a lot of questions as the realtor of the lender. How many of these have you done? How many of these does your company do? What is your experience with them? Do you see anything that could hang us up? And you really want to get their information and get a grip on what it's going to look like. So that's my Chaffa spiel.
That's awesome. No, that's great. Actually, I didn't really know much about it because I'm not licensed in Connecticut, so that's really cool. All right, so now it is my turn. So the product I'm going to go over is New Hampshire Housing. I am pretty well versed in these products. I do live here in New Hampshire, so I really do love this program, but it is completely different from Mass and Connecticut Housing. So New Hampshire Housing, they offer some cash assistance. They are nowhere near, the amount of money that Mass and Connecticut gives, but the products are set up a little differently. And so I'll go over the first product. This one is kind of a newer product in the last few years. It's their Home First program. So this is their main down payment assistance program. They offer a fixed of $5,000 or $10,000, and this can be applied towards your down payment or closing costs. So this program is a little different than some of their other programs. So this one, like Katie was talking about, between compliance and qualifying income, they will calculate the compliance income on this one, as well as we'll have to go off of the qualifying as well. So this is a first-time home buyer program only. Their other programs are not first-time home buyer only, but you cannot own another residence. So when you purchase the house, if you're using that other program that I'll go over, you have to be either selling your property or can't have an investment property. This one has the lowest interest rates. These Home First programs have the lowest interest rates, and they also offer the reduced mortgage insurance as well. The New Hampshire Housing credit score minimum between their conventional and their FHA or their government is a 620. And the way these products are set up is they're 5-year fully forgiven second. So these are a type of grant. They have a 0% interest rate and no monthly payment. So you just essentially will take, you'll close on your home, you'll have your main mortgage, your primary mortgage payment, and then the second is just a second lien on your property for either the 5 or 10,000. Now with this type of program, if you were to sell or refinance within the 5 years, you would actually owe that, the 5 or 10,000 back. They do not prorate it. There's no like reduction in that assistance. So you would owe it back, whether it's in your proceeds or if not, then you'd have to just pay it back to them. Once the 5-year mark is up, that lien actually just automatically comes off of your property. So it's a great program. I love it. I do them often. But again, that's just a little bit of a caveat. They did change it recently from 4 to 5 years. So now it's a 5-year fully forgiven. So the other fun fact about New Hampshire Housing, which I love as well, is that their interest rates are set on their website daily. So they're not gonna, teeter between lender to lender or bank to bank. Their, rates are set there. And New Hampshire Housing does a really, great job with their rates. A lot of my clients actually just go to New Hampshire Housing without even taking the down payment assistance due to the fact that the rates are just, that much better. And they give you options with no points. And then you can also buy down the rates on some of their products as well. On their website, there's a little rates tab. You can just click that and their daily rates will show up right there. And oh, another thing I meant to put on this slide is that this program is the only program that does also have purchase price limits. So depending on the town or area they're in, there are limits on what you can buy, and they start from a 1 unit all the way up to a 4 unit. And they also go off of household income on this program as well. There is a nice, pretty worksheet that they've made up that shows those income limits, the towns that have some higher limits, and then those purchase price limits as well.
Sam, I do want to add, I didn't have it on my slide, but there are there are acquisition limits on
Yep.
certain programs with mass housing as well, which is another reason why it makes sense to work with someone who understands these. This is just one of the other nuances that you as an agent don't need to worry about. You just need to know that you're with a lender who understands it.
Exactly.
Obviously, it's good to have the checks and balances, and we can send you those limits and what they are right now, just so you make sure you're protecting your clients as well.
Yeah, absolutely. And then we'll go to the next slide. And these are the other programs they offer. So the Home Flex program is their government-backed program, and then the Home Preferreds are their conventional. So right now, so these do change. And again, like Katie, we keep reiterating is that really work with someone that knows the program. So these type of programs do fluctuate and change, often on what they're offering for cash assistance, at least on the New Hampshire housing front. So right now for the FHA, VA, USDA, so those are the government backs, the RD. 1% and 2% cash assistance is offered on the government programs. That is 1% and 2% of the base loan amount. So just like some of the other programs, they do have their minimum down payments, 3% on conventional, 3.5% on the FHA. So that 1% and 2% cash assistance would be based off of the loan amount. Kind of same thing, 5-year fully forgiven, 0 interest, no payment. Sometimes this program makes sense. Other times it doesn't, just because of how low the cash is to be locked into that, 5-year fully forgiven, but it is a great program. These ones, you do not need to be a first-time home buyer. They do have different income limits. So again, talk to your lenders. They'll help your client fit into the best program, but we will be well aware. This is qualifying income only, which is great. We will not work off compliance on this one. So if they, get bonuses, and that puts them over the income limits, we actually don't have to use them, which is awesome. We underwrite these programs all in-house. We do not need a second layer approval. Credit score minimums are 620 again on these programs. Their rates are on there as well. Their programs will you'll need a the home buyer course certificate, so your clients will need to take them. They can be the online free ones, like through Fannie Mae, that we always will send our clients. And there was another thing I wanted. Oh, the only real main overlay to these products is the water tests. So if you're in New Hampshire, this is pretty common. We have a lot of people have private water. If you have private water in New Hampshire, that is their only overlay. So we'll need a water test. And that can be done at inspection, or if there's no inspection, you can just, get that separately done. And we usually get those. It's a pretty quick turnaround, but that's just something to be aware of. And your lender should, once your offer is accepted, tell you right away, hey guys, just heads up, this one does need that water test. I think that's really it on these programs. These ones are very kind of straightforward. They go off our Home Ready programs. So we really kind of just, the Fannie Mae is really the guideline on these. So
Pam, is there a residency requirement for the New Hampshire housing?
Nope. So as long as you're moving to the state or in the state, so there's no residency requirement on this one. Like I said, the first program is first-time home buyers only.
Perfect. Thank you. Someone
Yeah.
asked that in the chat, so I just wanted to.
Oh, perfect. Yes. Yep. And then let's see here. The next one. Okay. So Katie, I don't know if you want to go over some of these.
Yeah, I just need to briefly mention, here's a couple other ones that us in the room personally do. Florida Housing, Maine Housing, Rhode Island Housing, they all have their quirks. They all have their own things. Some are better than others. I know Florida is coming out with Hometown Heroes one that is actually available to most people in Florida. And they're going to be giving up to $35,000 starting in July. So there are multiple options out there for you. And it's really just about understanding those layers that they have additional above and beyond. And I'm going to give you an example of one layer just so you understand. Mass housing, for example, if you owe anything to the IRS, they want it paid off before closing, not at closing, before. So that means that we have to get the approval, then pay it off, get proof of that payoff, and then we can close. So it's just like one of those little things that we need to pay attention to and be prepared for. Some of them, could have things like collections or charge-offs being paid if they're over a certain amount above and beyond what a regular loan has. So you just want to be aware and work with someone who understands the extra layers that this program could add for your clients. And we have even more housing available. These just happen to be the ones that us on this call are doing as
We
well.
do, yeah.
And Sam, hit the next slide. I want to kind of wrap it up. I know I'm going a little fast, but I wanted to talk about our last down payment assistance program. This program, you do not need to be a first-time home buyer, and I really want to highlight this. This is amazing. Even, for example, I just had someone who got divorced and their ex, got a lot of the money from the home, so they didn't have much to put down. So they had some, but we were going to have to ask for a seller credit towards closing costs. We were able to add on this program, and they no longer had to ask for that concession, and they just got under an agreement on a house last week. And so this is a really great add-on program. I always look at the other programs first, but this is in addition for someone who might not fit the mold for the other program. There's also no income limit on this program. And so you can make $400,000 a year. It doesn't matter if maybe you're not great at budgeting and you need the down payment help, this is available. So the terms are not as good on this. You get 3.5 towards the down payment, and that down payment assistance is at 2% higher than whatever your primary loan is. So if you're at 7% interest for the main loan, you're going to be at 9% interest for the second loan over 10 years. So the second payment can be pretty hefty, and it might not make sense for everyone, but for a client who really needs this and it's going to put them in a better long-term position because of their situation, it is a great option for us to be able to take advantage of.
Katie, quick question on this program. So when you, I don't know if you want to answer this too. So when you are going to refinance, or if you were to sell, is there a time frame on do you owe it back?
You owe it back the whole time. This is just an assistance program. There's no forgiveness. When you refinance, most likely what your lender is going to do is combine the two loans based on what the value of the house is at that time. And then that's really it. So this is not through a government agency besides just FHA. This is just through us as a lender. It's not backed by any sort of housing agency.
Yep. Cool. It's a great program. Oh, the other thing too, I wanted to mention. So to be a first-time home buyer, you cannot have owned a home within the last 3 years. And we will check that we pull tax transcripts on all the state agency programs, right? Am I right about that?
Yeah, and just a note on that, a lot of people don't realize this, but if you are a parent who is displaced by a divorce, you could potentially be considered kind of a first-time buyer. So there is an option if that happens and you're trying to get a new home with your children to take advantage of some of these programs as well. So that's something that can be overlooked a lot because people say, oh, are you a first-time home buyer? They say no. And it's like, well, wait a minute, what's your situation? So we always take a very consultative approach. I believe all of us in the room do that.
Yep.
And we try to find out what their situation is so that we can make sure no stones are left unturned and that they qualify for programs we might have otherwise missed by getting just a little bit more detail.
Yep. And I think that is
it. Sorry to wrap that up and go a little fast towards the end, but we really respect everyone's time and appreciate you joining us here. If anyone has any personal questions, just message the loan officer who invited you to the group and they can answer any questions that you have. And make sure to just share this with your friends. We want this information to be available to all of our realtor partners because we know how much it can help you get business and also turn over business who might be lingering. So thank you so much again for joining us. Do you guys have anything to add?
No, I think that's it.
I think that was good. Yeah.
Awesome. We will see everyone next Monday at 10 o'clock.
All right.
Guys.
Thank you.
Bye, guys.
Bye.